July 2026, Independence regained ground. Florida reasserts itself and deals take longer to close. July 2026 delivered a market with a split personality. Interest and signed activity concentrated more heavily in the boom belt. Independence moved back ahead of franchise resales after June's near-even split, and Florida returned as the dominant closing market. At the same time, listings took longer to reach the closing table, signaling strong buyer interest but slower decision-making. Four themes emerged. Independence held 54% of closings after June's near-even 52-48 split. Florida re-established itself as the leader in closings, while Indiana moved into second place. North Carolina extended its lead as the leading indicator, while the Boom Belt posted record shares of signed CA and Google activity. Median days on market increased from 217 days in June to 274 days in July, even as signed CA activity remained roughly steady. We Sell Restaurants tracks buyer behavior, not just completed sales, because confidentiality agreements and inquiries typically lead closings by several months. The Boom Belt keeps tightening its grip. The 11-state Boom Belt, Alabama, Arkansas, Florida, Georgia, Louisiana, Mississippi, North Carolina, Oklahoma, South Carolina, Tennessee, and Texas, posted its strongest concentration in signed CA and Google traffic. Both reached 92%, up from 88% in June. New buyer inquiries represented 72% of the top 25 in July versus 76% in June. Signed CA activity rose from 88% to 92%. Google traffic rose from 88% to 92%, and July closings remained at 74%. New buyer inquiry share softened slightly, but every other Boom Belt metric strengthened, reinforcing that migration-driven demand is not a one-month trend. Independents pull back ahead. Franchise share cools. Franchise transactions accounted for 46% of July closings, down from 48% in June. Independents closed at 54%, moving closer to the 2025 baseline and opposite the direction suggested by June's franchise spike. Subway remained the major franchise story. 7 Subway locations changed hands in July, most within 2 flagged multi-unit packages, a 2-store combined listing in Miami South, and a 4-store package in Broward/Palm Beach, plus a standalone Broward sale. All 4 Hotbox Pizza locations in Noblesville, Indiana, also closed as franchise sales. Which, Mochanet, Firehouse Subs, Schlotzsky's, Dickey's BBQ, Moe's Southwest Grill, and Stoner's were also notable. Only 2 transactions carried the explicit multi-unit flag, both Subway, down from 3 packages in June. Franchise resales still commanded a premium over independents as buyers paid for proven systems and existing cash flow. Florida comes roaring back. Indiana surprises. Florida accounted for 49% of July closings, its strongest showing of the year and up from 31% in June. Indiana ranked second at 13%, driven largely by the Noblesville Hotbox Pizza package plus an Indianapolis pizza concept. Georgia, North Carolina, Texas, and Colorado each represented 8%. Closings also occurred in Arizona, Arkansas, and Rhode Island, showing that demand is not confined to the usual markets. Where buyers are shopping today, signed confidentiality agreements remain the strongest leading indicator of future closings, and North Carolina extended its dominance. The state generated 48% of the top signed CAs in July, up from 44% in June. Tennessee held second at 16%, powered by Nashville listings, while Florida and Texas rounded out the leaderboard. North Carolina also led Google traffic with 40% of top 25 views, followed by Tennessee at 20% and Florida at 16%. Charlotte, Raleigh, and Nashville remain among the markets buyers research most intensively before signing a CA. Messages that resonate with buyers, unlike June, when a single Raleigh listing swept all 3 engagement channels. July interest was more evenly distributed. No single listing ranked number 1 in inquiries, CAs, and Google traffic simultaneously. 5 listings reached the top 25 across all 3 categories. Buyers responded to turnkey positioning, fully equipped kitchens, and headlines leading with value or owner benefit numbers. Franchise versus independent, July's conversion story. Independents held a 54 to 46 majority of July closings. Across 2025, independents represented 78.4% of closings, so July moved closer to that historical pattern than June. Nearly 80% of July closings were below $250,000, confirming that the more accessible end of the market is where deals are getting done, regardless of concept or brand. Notable July transactions. Largest sale of the month, Winghouse Bar and Grill in Ellenton, Florida, sold at July's highest price point. Like June's largest deal, an independent in Boulder, Colorado, July's biggest transaction was also an independent rather than a franchise, despite being part of a recognizable regional brand. Fastest deal to close. A Pink Easy location in Northwest Arkansas went from listing to close in 23 days with 13 signed CAs. It did not match June's 17-day record, but remained a standout. Most CAs before closing. Buca Grill in Frisco, Texas, generated 288 signed confidentiality agreements before closing at 274 days on market, reinforcing that high inquiry and CA volume do not guarantee a fast closing. Multi-unit momentum. 2 packages closed in July, a 2-store Subway deal in Miami South, and a 4-store Subway deal in Broward/Palm Beach. That was down from 3 packages in June, but still made Subway the busiest brand of the month. A $4.78 million multi-unit Charlotte package and a $2.7 million multi-unit Central Florida franchise package also ranked among July's most viewed listings. Strategic implications. From July's data for sellers. Turnkey positioning, fully equipped claims, and clear value language continue to move buyers to act. Sellers should also prepare for a longer runway. Median days on market climbed from 217 in June to 274 in July, even while buyer engagement stayed strong. Pricing discipline and clean books remain important. For buyers, independents still make up 54% of closings, while franchise resales remain available at a modest premium where both segments sit below new unit development costs. North Carolina and Tennessee remain competitive for buyer attention, so buyers should arrive pre-qualified. Quieter markets can still produce outsized opportunities. For investors, multi-unit activity was lighter by deal count in July, with 2 packages versus 3 in June. But top-tier inquiry and Google traffic tell a different story. The $4.78 million Charlotte package and $2.7 million Central Florida franchise package both ranked among the month's most viewed listings. Investors comfortable underwriting portfolios should watch this pipeline. For franchisors, franchise resale share cooled after June's spike, showing why one strong month should not be treated as a long-term trend. An organized, responsive transfer process still matters. Brands that streamline approval and support qualified resale buyers are best positioned as the franchise and independent mix changes. Conclusion, July. 2026 is best read as a correction, not a new direction. Independents regained the majority of closings, the boom belt's grip on buyer engagement tightened, and multi-unit closings declined even as portfolio interest stayed strong. The clearest caution flag is deal velocity. Deals are taking longer to close, so sellers and brokers should plan for a longer runway, even when buyer interest remains strong. For those in the market to buy or sell a restaurant, visit WeSellRestaurants.com for more information and access to the most online restaurant listings for sale. We Sell Restaurants is the nation's largest restaurant brokerage franchise and publishes monthly restaurant resale market data based on actual transaction activity and buyer engagement across its nationwide inventory.